What are some of the things that people need to know about getting ready to buy? Like some steps that they need to take to get themselves in a position to be able to buy a house?
Yes. So a lot of people who start off by just going to a realtor and just starting to look at houses, and that is not where you want to start. The very first thing, and I did the same thing too when I first started looking, so totally fine. But if you want to be in a better position to buy this house and to have a smooth process, the very first thing that you want to do is you want to check your credit. And you want to check the correct credit. So there isn't anybody that I've spoken to thus far that looks at the correct credit score when it comes to buying a house. Your regular credit score that you see at your bank or that you see at Experian or even let you look on Credit Karma, that is not the credit score that is used by mortgage lenders to qualify you for a mortgage. You specifically want to look at a mortgage FICO, which you can get either at myfico.com, you have to pay for it, or if you want it for free, you can talk to a lender, they'll run your credit and they will give you your mortgage FICO score. And you want to check this because the last house that I bought, I didn't know about this. I was looking at Credit Karma. I thought my score was good. I was like, I have a 700, I'm good to go. And then come to find out my mortgage credit score was actually a 520. Yes. And so I thought, I was going to be buying a house in the next month. And it actually took about 6 months to fix my credit and be able to buy this house. And so you don't want to be, especially if you have a lease that's coming up, if you have a deadline for when you need to be out of this house, you want to check the correct credit score first, because if that is not what you think it is, it can completely deter your plans.
Oh my goodness.
So once your credit score, and then, once you check your credit score, where it needs to be is it needs to be a minimum of a 580. If you want an FHA loan, if you want a conventional loan, it needs to be a minimum of a 620 technically, but 640 is what most lenders go with. So once your score is in that range, you then need to go ahead and, before you talk to a lender, understand how much works for you, right? So want to look at your budget and make sure that you are clear on how much you can afford on a month-to-month basis for this house. Because the reality is when you go to your lender, they're gonna tell you how much you can get based on your income. And if you're not careful, you end up using that whole mortgage for a house and then end up having a mortgage payment that you can't afford. So before you even talk to a lender, be crystal clear on what your budget is based on your situation and what you have to pay. And then the next step is you want to go ahead and gather all the different documents that you're going to need for this application. So your tax documents, your 2 weeks of pay stubs, my mind's going blank right now. But I do have a checklist that is available. They'll give me information. So I have a whole checklist of what you need to get ready, the documents that you need for your mortgage application. And then at that point, that's when you speak to a lender who's going to give you a pre-approval, and then you go to see a realtor. So there's if you don't do it in that order, you can still get your house, but you might run into some roadblocks, and you definitely don't want to do that.
Right. I have seen horror stories where people who didn't take the appropriate steps, like you're saying, and understanding what it is that they can actually afford, they didn't know that there is a low and a high of the value of a house that you can afford. And in the situation that I'm talking about, these people were put in on the high end of what they had been approved for. And they did get their dream house, but they were working, they had to work additional jobs after they got the house in order to make the monthly payment. And they were out of babysitting expenses because they had to, pay for someone to watch their 2-year-old while they were working around the clock. And then finally they woke up and said, we are house poor. We are working for this house instead of being able to enjoy this house. And they made a decision to get out of it. So you do have to understand what you can afford and not just get into what maybe the realtor or the mortgage company is telling you that you can qualify for.
Yeah. So you have to remember that everybody that is involved in this process works on commission, right? So for your lender,
the more they sell, the more they make.
Yep. They're gonna tell you the absolute max you can get, then you have to adjust. So my last house, I was approved for $350,000, and my hard stop for myself was $150 because I needed a mortgage under $1,000.
Right.
And so if you're not clear, you can end up spending the whole money, and then now you are, like you say, house poor. I love that word.
Right. Yeah, house poor. Because when you got more house than you can afford to enjoy, you are house poor, and you don't want to be working to actually just make a payment. You want to be working to enjoy the house that you're living in.